Okay, Dan Fitzpatrick here at stockmarketmentor.com, and I want to look at IREN. Now, this company, this stock, absolutely screamed over the last few weeks. Now, we initially got in this stock back here, it was a while ago, and we were promptly stopped out at about 1895. I kept the stop a little bit too tight. Stayed in the stock, and ultimately the stock started running up again. And if you look at this, it was kind of a classic shakeout here. Here was the initial breakout was here. Tagged, almost hit 20, but you could see the volume, huge volume spike, like really, really big volume spike, 36 million. So this was the first indication, at least recently here, that that institutions were really, really interested in this stock, and then the stock ultimately runs higher. And this was the day, like the very next day, when we got shaken out of this trade. For a loss, kind of bummed me out. But the thing is, a shakeout is different than a get the hell out. And so we stay in this trade. The stock starts to run up, and then this is back again. What do we get? Another low of 1855. Okay, fine, hanging in there. Boom, in the next day. You got to stick with these stocks. If you believe in the pattern, if you see the company, you like what they do, you have to understand that on breakouts like this, you got to combine volume and price action to get a sense of what's happening. Now, with this so far, this is the takeaway. Volatile stock trying to break out, but it is holding the pattern. It's holding this level up here. So prior to this breakout, the real trading range here was between 19 bucks, actually clear down to 15. It's a massively wide trading range. So once this thing broke out, the trading range has actually tightened to, it has to be again between 19 bucks down to about 1750 or so, depending on how you want to measure it. So once the stock breaks out above 20 bucks on volume, this is a really, really good one to be in. Volatile as heck. And that's important. So the idea behind this is you got to start taking small positions. Unless you just have massive risk tolerance, go ahead, got a hunch, buy a bunch. But you can take small positions, take advantage of the volatility, and once you get some clarity, bam, you buy more stock, and then this just continues to run. It's giving a few opportunities to go ahead and get in at a higher level without feeling like you're just absolutely chasing the run up, like here, where you get this little 2-day pullback, actually kind of a 3-day, and then we're off to the races here. Strong earnings last Friday, gap down today with so much of the market, but then this is completely recovered. So in my view, if this stock trades above, if it holds above Friday's intraday high of 29.50, and it's not there yet, but close, and at one point today it was actually past that. But if it holds above Friday's intraday high, I think you can be buying this stock again. Yes, it's run up quite a bit, but look at the institutional sponsorship. They do not day trade. They don't buy a stock like this and then dump it at the open the next day. This is a stock that's going to continue to run. It's hit an all-time high from its 2021 initial, I just call it an IPO enthusiasm high, and that gives us clear sailing for as long as the bulls want to run. So my suggestion is, if you're not in this stock already, you're making a late entry, but I don't think it's too late. You go ahead and buy the stock here. Keep your stop tight enough to where you're protecting your risk. So look, that's all I got for you today. If you want to get more trades like these and trades that we actually follow, entry, stop level, raise your stop, when to exit, partial, entire position, stuff like that. We're really walking you through the whole thing. Then join stockmarketmentor.com. You can also get similar stuff at Option Market Mentor. And hey, crypto as well. So I got you covered, 3 different bases. Hope to see you there. Bye.